right, everyone. Welcome back to another crazy Monday. As joking in the green room, I always seem to get the most insane market action on this Monday, but it also makes for much more fun time than to see the market up or down 2%. So one thing I'm going to do today, I think it's important to always go back and remember the whole history doesn't necessarily repeat, but it often rhymes. And I think we're kind of in that stage right now where we can go back and we can look in the past and see what had happened with a Trump admin and what happened with this kind of tariff talks, right? We've been through all this before, nothing new under the sun. But remember the point of this, right? You give me your tickers, crypto, stocks, Forex for those nerds, whatever you want me to look at. And as a technical trader, I'll take a look at that as well. So again, a quick introduction to myself. I just do this every now and then because I keep forgetting there might be new people here. My name is Michael Nauss. I am a chartered market technician and a quant. So I look at the market from first a quantitative side of things, very math driven. And then from there, I take a look at the overall just technicals, like draw the lines on the chart and do all that cool stuff. But I think it's always good to start from that kind of quantitative base for most people, fundamental base for others. So again, ask away whatever you want to talk about. But one thing I did want to show people, let's go and show my screen here and grab this one. Oh, nope, that's not that. That's everything. So let's try that again. Share screen and click on just the chart. There it is. Perfect. All right. Bring out the chat too there. So obviously, right, unless you're living, in case you were living under a rock, massive gap up in the market today. Pretty substantial gap as well. And I think most importantly, a gap above this prior area. So this blue line is the anchored VWAP from all-time highs. That's something that has been kind of holding us down here for a while, but now we're above that pretty nicely. And we've been above that now for enough time that I think that any sort of sell-off, this might be an area to watch on the back test of support. But just looking at pure support and resistance and price memory, this 575 area, this is where we stopped before, right? So we had the initial sell-off of, oh no, things are bad. Oh no, he actually means that he's going to put on tariffs when he says he's going to put on tariffs. We bounced into there. That's where a lot of people got short or sold. And then down we go. So now that we're back above that, everyone who shorted into that initial pop is now wrong. Anyone who sold anywhere down here is now very much regretting their lives and potentially FOMOing in. Looking at just the action off the morning from the get-go, it's been almost nothing, which I think I'm going to put in the bull camp, right? If we had just gapped up and then just completely gave it up and sold off all day, which again could still happen to the close, that I would be a little bit more worried about. But it's not what we're seeing right now. We're not seeing that dramatic move lower. We're just kind of seeing a slow grind here. We put in a little bit of a dip there around the 10:30 mark. So after that first hour, after the day traders all give up and go home, now we're just kind of chopping sideways. So the more we consolidate, especially on the daily chart, the more we consolidate above this price, the better. So in a perfect world, right, we pull back a little bit, try to fill the gap. Some buyers come in, kind of like what happened here, right? You had a big gap up, then we came in and we found buyers on that gap up. Perfect world. I think that's what happens here. Now, the one thing I wanted to show everyone is the analog to what happened before. A lot of people forget. We had a Trump administration. We had him bullying JPOW, which is his employee on Twitter. We had him doing trade wars with China with the same President Z, right? This isn't new, right? We've had this before. The benefit to that as traders, you can take a look at kind of what happened here and realize that there is nothing new under the sun. We've seen all this before, and we could potentially see it all again. So I look at it as this was the down move, the battle that went back and forth, and now we are back up. And not only we're back up, we're kind of in this area right here, right, where we gapped above this prior zone. This green line here is the ZWAG thrust. I think on one of the Fridays when I was hanging out with Jordan, I talked about the ZWAG thrust, and again, we're at and above that zone. So question is, does the rest of the market look just like this, where, little pullbacks along the way, like a normal market, but we grind back up to this all-time highs? If so, great, right? I'm long, and I've been long talking about it for a while now. So I'm talking my book. I want us to move higher. But if we're gonna look like this, like if I showed you this here, and I came on, and I said, hey, this was right current price action. A lot of people, I think, would have been fooled unless they looked a little closer. So we've been grinding higher and higher and higher. Oh, and now we are right against this area here, this 264. So again, you can see back and forth price action all the way, and then 2020, but we'll ignore that. Hopefully there's not another pandemic. Just showing that we take that we just looked at, and then we look at this price action right here where we had a little mini sell-off, a big pop up, really bad sell-off, and now we're starting to recover. We're starting to push higher here. So it's funny, if you go back and look at the market right now, nothing happened, right? This entire year. If you forget all of this, we started the year where is January 1. It's right here. So this is the beginning of the year. This is the opening price of the year. And we're pretty much right there now. We've just done this in an incredibly volatile way, which overall, again, I'm going to put in the bull camp. We had 2 back-to-back 20% crazy up years in the market. Almost looks like we were looking for an excuse for the sell-off. Now, I expect the volatility to continue. I expect more tariff talk to come and go, and fights to be going on either side, and that will cause 3% gap ups and 3% down moves and all of that. I think every pullback above 550 is viable. Below 550, maybe it's time to kind of worry as well, right? So that's what I'm looking at here, just in the overall market. Last couple things to note. Bitcoin reversing a little bit harder in the market, so backing off from these all-time highs. That's something I certainly want to keep an eye on, because of how strong Bitcoin was leading in. Bitcoin led us right here. That was the first initial kind of bounce out of the whole tariff tantrum stuff. And then the next one we had right here. And again, crypto led. So if crypto is going to be the leader, fine. We just keep an eye on it. So far today, selling off just a little bit, backing up from this zone. But, you're talking, what, 37% up move to get to prior all-time highs. A little bit of a pullback, some consolidation right here, I think would make perfect sense. We maybe come back and test 100,000 and then break. But we got to keep an eye. We got to keep an eye on that as well. So I do see some different. Yeah, I see a handful of chats coming in. Again, go to your chat, grab whatever it is that you want to see, and let me know. So the first one here is Morgan Stanley. And I'm actually I keep forgetting this. I'm actually going to go to the YouTube in case, because I've got the stock twits. And then there's also a YouTube. So I'm going to click on that as well. I'm going to have all the chats open and just see. So you can chat there as well, and I'll check on that if you'd like. Okay, let's go back to right there. Perfect. Okay, so first of all, Morgan Stanley. So a lot of these things look the same. Morgan Stanley, JP Morgan, I was looking at earlier. It went in one of the videos. I just put out a video before I came on here. Talked a little bit about JP Morgan there as well. These are interesting because I don't know why they care about tariffs. I don't know why they're down on tariffs. I don't know why they're up on the lack of tariffs. It doesn't make any sense to me. I don't know why that matters, because they're not obviously selling anything. I don't know if it's one of those tariffs are generally considered in the broad scheme of things economic slowdowns. So if that's going to be a big economic slowdown, it's going to hurt financials. But I think financials are a good place to kind of park your money regardless, because if you look at the XLF, much closer to all-time highs than the SPY. We're on a weekly chart here, but the XLF is doing relatively strong, and a lot of these earnings have been good as well. The current candle on Morgan Stanley, I think, is somewhat problematic, but these topping tails are interesting. But if we pull back into, again, these prior kind of March 2025 highs and we hold, this one looks good. These are really strong, and they pay dividends while you wait, which I think is fantastic for them. So you got to remember, Morgan Stanley, these are such massive companies that they're probably not going to double or triple on you. They're likely not going to get cut in half either. So these are safer places to trade. I think the main bullish thesis behind something like this is lower regulation. If now that you got to remember, when Trump was initially announced and elected, the market ripped. A lot of people forget about that. The initial source of the rip for a lot of people was lower regulation and deregulation and lower taxes and things like that. Then the tariffs came and that crashed us. And then he is completely backpedaling on all of the tariffs, so we're rallying again. So it could be come back into vogue of saying, right, this was the gap on the election right here. Right, so it could be one of those, okay, now we are back to being hyped about lower regulation. We're back to hyped about the fact that if you reduce regulation, especially on banks, that is their biggest cost. You got to remember the banking sector, their biggest cost isn't building XYZ thing. Their biggest idea, their biggest issue is regulation and the fact that they have to deal with, how many deposits they have to keep, all of these things. So this one looks great, but like a lot of stocks we're going to talk about, remember 93 to 126 in pretty much a straight line. So you're talking 35% rip. And that's a lot. So yes, trend following works, which means buying things that are already moving higher works. It's, there's a lot of studies, a lot of math behind that you can look at. You can read trend following ideas and trend following systems that are out there. The problem is you generally have to sit through a lot of pain, because what happens quite often is pullbacks in names under this. So overextended. Long-term chart looks great. I think it's a very bullish regime for potentially financials with, again, lower regulations and things like that as well. So the dollar recovering, I think, will be good for the banks as well. We're getting a big pop in the dollar. You can see ever since this China deal was announced, the dollar's been doing really, really well here. So next, Starbucks. Starbucks always makes me laugh every time I look at this, because for those who don't know, this is where they fired their CEO and then the company gained $2 billion in market cap like that. And that's got to be a gut punch when you're mind your own business, you're doing your damnedest as the CEO of a giant company, and they fire you, and the next day your company's worth $2 billion more. It's funny to me. I find that hilarious. So we're dealing with that gap still, right? So they have got a new CEO in place. Again, they can the old one, but we're still dealing with that gap. If we look at the high of the gap, it's right here, and then the low of the gap is kind of right here. So we're inside that no man's land still. So for me, that's the biggest area of interest, because right, we came back down to it. We found some support right here, and then we've had some action in this gap as well. So this works out to be about $90, give or take a share. Overall, I look at this chart and I zoom out and I just see a choppy mess, right? This is, as traders, we're generally looking for uptrends or downtrends, right? Buy things in uptrends, either through pullbacks or breakouts or whatever it is. Short things in downtrends. Generally speaking, the way we want to look at things, this is in a no trend, right? It's inside, if we just take this, it's inside a consolidation, which is inside another consolidation. So consolidation after consolidation here. So for me, I know earnings is where, oh, this is August. So it already just did earnings right here. Let's not care that much about tariffs to not be up very much. I guess you can't get much from China if you're a food company, but we are just range bound. So I kind of look at this and say, I'm not super interested in taking a bet in either direction. What I might do with something like this is I may you could sell straddles, you could sell strangles, you could sell iron condors for all you fancy nerds out there. I think there is something to be said for that, where if it's not going to go anywhere, you can make money off that. if you're looking for a long trade, for me, it's you got to get back through this area of support that we just broke down. You got to look at this and you got to say, well, the SPY got back through here. The Qs is back through here. A lot of names are back through, they reversed most of the tariff tantrum, which started right here. Always remember, April 2nd. All right, we completely crashed off that. And now a lot of stocks are well above where that tariff tantrum started. Starbucks isn't. So Starbucks is relatively weak and stuck inside of a range. So this is a completely no touch for me. It's the amount of money I spend there with the wife. You would hope they would be doing a little bit better than that. Berk B reporting earnings. Berkshire Hathaway earnings don't mean a whole lot. Just FYI, like if you go back, there's not on the earnings day, there's not a lot of movement to it because it's more important for something like Berkshire Hathaway because it's not a company that produces widgets and they have to report how much it costs them to produce the widgets and what the profit was on the widgets they produced and all of this. Their holdings are more important than their earnings, right? You can kind of, it's very easy to guess what a Berkshire Hathaway earnings is going to be because you know what they hold. The only part you don't know is kind of like the private side of things. So just FYI, earnings are not as big of an event often for Berkshire Hathaway as it can be for other companies. We're still dealing with the aftermath of Uncle Warren stepping down. Right? He stepped down right at all-time highs, and now we're down here as well. So I think part of it is more of a pay attention to not the earnings number, but the earnings call, where everyone goes, what is the succession plan? More details about will he stay involved and in what capacity. I would be shocked, right? If you do a thing until you're 94 that he's just going to completely go and drink pina coladas on the beach, I think there's probably going to be some sort of I will no longer be the CEO, but I'm still going to research reports and do all that kind of stuff. I'll still be advising that type of thing. This whole gap down seems a little bit unwarranted to me. I get it. You're the GOAT. Right? There's a lot of weight on your name, and you leave. That becomes interesting. So what I'd be interested in, going back to the technicals, is a potential island reversal. For those who don't know, I always just like to draw this stuff out. Island reversal is basically you've got your normal price action, and then you have a gap, and then you spend a couple days in the gap, and then you move again, right? This creates your island reversal. The idea is that this is your island and that there was a reversal that happened from it, which means you had either a gap down. This obviously can happen in reverse, but you had a gap down, a little bit of action there, then a gap up and a move in the other direction. So everyone who took this gap down and then shorted into it, they're immediately wrong and losing money. So I would watch that in case there's some sort of news. But while it's in this range, again, it's just there's so many things moving right now. I don't really want to focus my capital on the things that aren't. So I would just look at this and, the gap has been here long enough that you could potentially just mark the highs and the lows. So you could mark the high here of the gap, and then you could mark the low there of the gap. And that's your trading range. If we break out of that trading range, you could take a trade there. If it breaks down under the trading range, you should take a trade there. I just wouldn't bet and take too much in the middle here. I mean, the question on everyone's mind when it comes to Berkshire Hathaway is the next guy as good as Uncle Warren? Is Uncle Warren going to stick around? Which, again, I think he will. And at what amount of role and play will he have when it comes to the picking of stocks? Lastly, you got to know what's in it. Right? And that becomes a big thing. And you can just Google it, right? Berkshire Hathaway Holdings, and just look at the components of it, because it's not so much a stock, it is a basket of stocks. So you got to look at the holdings of them and see how they're doing, right? It has a lot of Apple, we all know. Has a lot of Coca-Cola, as we know, which is why I don't think it's moving up too much today, because he has a lot of these staples that underperform the market or even go down, as you're seeing when the market goes dramatically up higher. So check out his holdings and go through those one by one. I think that's going to be more important than the overall index itself. So I see a thumbs up there. I appreciate that. So SMCI, first of all, as soon as the DOJ gets involved, I get scared. Just that is a policy and a premise of myself at Stats Edge Trading that you don't have to take, but two things scare me as a trader and investor. One is the Department of Justice, because they can just kick down your door and seize all of your stuff, even if you did nothing wrong. They will give them back to you eventually if you did nothing wrong, but is your company bankrupt by then? Two is accounting and CFO problems. The CFOs and the accountants, they know where the bodies are. They know where the skeletons are hiding. They know more about the company often than the CEO does. So both of those things combined have me worried, because you're seeing both of those in SMCI. You're seeing both of those things occurring at the same time. That's, again, concerning to me, right? So you have something that's range bound, which I never like range bound things because they're just not interesting. Things that are range bound can remain range bound for a long period of time. So you have something that's range bound. You have something that had problems with the DOJ. You had some things that had problems with accounting and disclosures. All of that makes me super terrified, into the point in which I understand why people look at this as a AI adjacent play, because of the beta. Right? You can go from $30 and can rip all the way up to 120 to get to all-time highs. That's a 5 times or 4 times your return. That's an amazing trade. However, this thing could very easily be zero. So just be careful. Nothing that's interesting to me. It is in a downtrend. It is in a downtrend with a whole bunch of bad news and scary things. So this is a complete avoid for me. If I'm looking for AI adjacent names, I like, something like AVGO. The king is going to be NVIDIA, right? We're back through the VWAP from all-time highs. You could even just trade the semiconductor sector. That's going to move 100% with AI. SMCI, again, is a pure AI play. It's all people care about is, this is kind of a proxy for AI. So not for me personally. I'm really worried about something like this. So PCT and a whole bunch of new tech, new factory trials for new product. Trunks in huge short interest. Yeah, none of that matters to me. Again, more range bound action. Right? We have stocks that are doing well out there, guys, and that's, to me, a lot of the focus. Right? Netflix, new all-time highs on Thursday. We have a lot of names that are doing PLTR. This one looks like it's challenging new all-time highs. HIMS looks like it's challenging or might challenge new all-time highs. I look at PCT and I'm like, okay, that's good, I guess, all those things that you said about it. But until it can get above this zone, I'm not interested. Right? This pure cycle, we have this massive zone here where it tried to get through, and it even tried back here and it failed. So until it gets to like this $12 area, I'm worried. It's a speculative type play. Now, it could get there tomorrow, and even from here to there is a massive percent return. But I just look at this and say, I'm not going to just take a bet on something that it's not doing anything. Right? This is just kind of sideways chop. So earnings were okay. It missed on revenue by a lot, but then beat on earnings. So that might be one of those where you have to actually look into the numbers a little more, because if you miss on revenue by half, you're making half as much money as people expect, but you still beat on earnings. Is that one of those they did like there was a one-time line item thing that they made a bunch of money on? That makes me a little worried about something like that. So I just look at this and say, hey, if you're a trend line guy, you could break a trend line in 8, maybe give it a shot there. If it gets through this 12-13, maybe that's a little bit more interesting. But I just look at this thing and say, hey, if you bought this thing in 2021, you're pretty much at the same price you are now. So this isn't a company that's growing dramatically. It's generally speaking burning money. Again, I would look at that last earnings report and see, is that geez, why does it have 2 earnings reports back to back like that? That's kind of scary too. Was this a fluke, right? Was this they had some type of event that, sometimes those sneaky accountants, right? There's like a one-time sale of something that ends up making the money, or they can reduce expenses by X for 1 quarter only, that type of thing, right? And that's not for me. That's not what I do. So I want to see this thing resolve higher before I'm interested in it. Especially, again, a company that's losing money overall and losing money pretty dramatically in such a high interest rate cycle. That's a lot of people forget about that, right? We got to remember interest rates are high. So what high interest rates do is it increases the burden for individual stocks to perform. If money is free, it is okay if your company isn't making money, because they can borrow for free. Everything, there's nowhere else to put my money. Once interest rates get to, I think, what, the 4.5%, 5%, it's like, if you're not making any money, why don't I just put my money somewhere else and make 5% on, right? So the environment for these type of money losing plays are a little bit different. TSE, do you mean the TSE or do you mean the Toronto Stock Exchange? Because this TSE is likely going to go bankrupt. Again, I don't know what they do. No idea. But any company that has crashed from 85 or 80, 70 bucks down to 2 and cannot get going at all, I worry about. Right? Like, look at this recent price action. Earnings. Ooh, they missed revenue by $100 million, and they burnt a bunch of money. That's nothing that is interesting to me there from a long side. If anything, this kind of looks like a potential large bear flag that it's breaking down from, where you're going to look at this and say, hey, it's an overall downtrend, right? You don't need to be a CMT or a chart nerd to see this, right? From 70 bucks down to a low of 2. That's not good, right? That's not what you want to see your company do. Consolidates for a period of time and then breaks down off bad earnings, off a $127 million miss. That, again, that seems like it's almost an errant tick because it's so bad. This is one of those where you start looking deep into their financials, because if you could do it here, if they don't have any cash, that could be a problem. So this is a $91 million company. So it's not a huge company. How do they miss by $127 million if the market cap's only 100 millions? This feels weird to me. Yeah, they have way more liabilities than they do cash. They have $1 billion in assets. It's almost like it missed a split or something. These numbers look weird to me, but just be careful, right? Downtrend. It kind of looks like it did right here in the 20s before it continued to fall. So that's not something that I'm interested in. Cough, Capital One. This is a lot of my comments when it comes to Morgan Stanley are going to hold true here. I really think the financial space is a good space because it protected itself very well from tariff talk. If tariffs come back, because we're all looking at this and we're taking a deep sigh of release saying this is over. Not necessarily over. We could just do the whole thing. There's nothing stopping from them waking up on the wrong side of the bed and say, you know what? screw China. We're doing it again and just re-up to 400% tariffs or whatever the height was before. They're pretty good sheltered there. And the fact, talking about outperformance, this thing is nearing all-time highs where the SPY isn't. So we're getting some good relative strength in that all-time high kind of sector. So I like it. Right? I like this one. I again, like the other one, I will say we are quite extended here today, up 40% off its lows. That's significant for sure. So we just need to make sure that we understand that we're okay with the fact that this thing could pull back, right, 10%, and it would still be healthy in this move higher. And if you look at this and say, well, we had, right, this massive move, and then say we pull back, could we do something like that? Well, that's a 10% pullback to kind of come in and fill that gap. So you just have to understand that if you're buying something up here, that's certainly a possibility. So I don't know what's going to happen, but I like these names way better than a lot of the other stuff that you guys have been looking at because it's strong, right? If you don't believe me, you can just take the weekend and go look at relative strength and trend following studies. There's been a lot of them published online where they went through and they said basically simple things like what happened if I buy a stock, if I buy stocks at 52-week highs versus buying stock at 52-week lows. It dramatically outperforms buying stocks at 52-week highs. It's hard for us as humans to do it because I think we're trained in every other aspect of our life to buy things as they're on sale. Like it's on sale, so I should buy it. And this is overextended, or this is overpriced, so I should sell it. It's just completely different when it comes to the overall market, when it comes to the way markets actually work. So this kind of thing I like way better than a lot of the other stuff. Why BTC? Round Hill Bitcoin covered call. Yeah, see, though, this is something that you don't do technical analysis on. It's kind of interesting. I didn't even know this existed. Sorry, a little dry there. For those who don't know, just a quick chat about these covered call ETFs. What they do is they take an asset, in this case Bitcoin, and then they write calls against it. So what will happen is they convert your trading upside reward for income. If Bitcoin doubles, this one won't. YBTC will not double. It will go up. I don't know. It depends how many options they sell, but it'll go up 150% or not 100, maybe 50%, 25%, something like that. But what you're doing is you're getting income. So they're selling options against, they own a bunch of Bitcoin or IBIT or futures or whatever it is, and they're selling calls against that. So it's basically like you owning Bitcoin and selling calls against Bitcoin, or owning IBIT and selling calls against IBIT. You're just outsourcing it for a very, very small fee. And for the right kind of investor, I like these because you're hedging the downside a little bit, right? They're not actual hedges, but the calls that they own will go down in value as the stock goes down. But you're getting income, but you're capping upside. So it's one of those whole thing of do you need the income, right? If you're investing for income, then something like this makes sense. If you like Bitcoin and you think Bitcoin's going to move much, much higher, you're better just buying anything else crypto related. So I don't see anything wrong with these. If you're going to do any analysis, you do analysis on the underlying security, and then you buy this, right? So the perfect time for this particular strategy is if you think Bitcoin is going to go nowhere for a period of time, especially in a volatile way, goes nowhere for a period of time, or grinds slowly higher. If it grinds slowly higher or it goes nowhere for a period of time, then this is the instrument for you. If Bitcoin rips, then you're leaving a whole bunch of money on the table. And I am not an accountant. I don't even live in your country. So I live in a different country. So what I'm going to say about taxes, I could be 100% wrong, just FYI. But you're sacrificing potential capital gains for dividends, which at least in my country gets a worse tax treatment. So, right, I could be wrong, but at least in my country, you get it. You get a worse tax treatment for that. So just know all of those things. Bros, Dutch Bros, it's very interesting. I've been watching Dutch Bros for a while here. This is the anchored VWAP from the IPO. It's well above that. It's well above the anchored VWAP from all-time highs. I'm with you on this. I like the look of this. Pretty solid trend line here that it broke on earnings. So, right, we had earnings on this day after hours. So it means this is the earnings candle where people bought aggressively into earnings, and they obviously liked whatever they said. So it's a nice looking setup. It's a nice looking trade. So yeah, it's a great look, and then a continuation from there. So I agree with you. I like Dutch Bros. I think it's a coffee shop. We don't have any of those up here that I know of, but yeah, it's a really nice look. All-time highs are a little bit away. And then, long term, the thing I really like about it is if you zoom way out, this looks like a really big kind of cup and handle setup, right? You have the big cup. I'll just draw it in here. You have the big cup like that. And then you get to the high of the cup, and then you have this nice little pullback. This is kind of your handle. So then if you get back through that, if you get through 80, you're probably going to hit 100. If you hit 100, you're probably going to 120. So I like this. So if it is a coffee shop, which I think it is, you tell me how it is. I'm a bit of a coffee guy myself. So now interesting, again, if I'm right, and it is a coffee shop, then you take that and you compare it to Starbucks. Right. So we talk about relative strength, relative weakness all the time, and the importance of buying things that are relatively strong and not buying things that are relatively weak. Bros is obviously relatively strong to Starbucks. So maybe Starbucks is going to get dethroned and people are going to start going to this Bros. We have Starbucks where I live, even my tiny little fishing village, but we do not have this Bros. So again, it's like coffee at the end of the day. What difference does it make? FTAI infrastructure. Eesh. That is a rounded top if I've ever seen. So we just talked about a cup and handle there. This is a bit of a reverse cup and handle where you have this potential top right here. So that would be the cup. There's a way to invert the chart. Yeah. Keep forgetting that you can do that. So if I didn't know what stock this was, Bros is a coffee place, none in Canada. Darn. Right. So I inverted your chart. Right. So this is this FIP. So the question you really got to ask yourself, this is a good exercise to do. If you're a trading view person on Mac, it is option I. And on Windows, I think it's Alt I. And it inverts the chart. So you have to look at it and you have to say, would I buy this? Because this looks like a cup and handle to me if it would go and break back through this. So when I look at this, I kind of think the opposite. Something bad happened where it fell, not even in a straight line, sustained selling from $10 down to $3. So 2/3 of its value lost in a slow, sustained, every dip is getting sold type of way, and then a little bit of a bounce from there. So I just look at that and I say, if it looked like this, I would be interested in buying it, but it looks like this. So if anything, I'd be interested in selling it. And For me, what would I need in order to change my opinion on something like that is just a change in trend, right? This is a bounce right now. It's not a change in trend. A change in trend would need a pullback, buyers to come in at a higher price, and then to do something like that to push us higher. That's a change in trend. This is just something that kind of looks like it did here before it fell down, or it looked like it did here before it fell down, and now it looks like this before maybe it falls to new lows. So if you're a fundamental guy and you think whatever fundamentals cause this downtrend to change, great. I just look at this and again, I invert that chart and I go, not really interested. DEFT. If it's an IPO, DeFi Technologies. So it just got uplisted to the NASDAQ, I think you're saying. So it just started listing on the NASDAQ. Great growth stock. Finance investment management. It's a good looking chart, right? When we talk about cup and handles, this is for sure one. You take this, right? There's your cup. And then right, handles can either be down or they can just be sideways action. So you could say that's your handle. And then you're getting a bit of a breakout today, tried to, and then fade back down. So this is the prior high at about $4. It's about $4 right now. You've got your cup and handle kind of action there, then sideways chop. And if it broke through, great. This candle is a bit concerning. Right from the open, you're down 22%. So be careful. Sometimes, if it is an uplisting, if that's what you meant, just start trading on the NASDAQ. For those who don't know, uplisting just means that it was something that was on the pinks, pink sheet, OTC, whatever, and now it's starting to trade on the NASDAQ. That's generally a pretty prestigious thing because anybody can open up a company to trade on the pinks. There's a very specific reporting, market cap, and price requirements to get on the NASDAQ. So it's considered like a prestigious, we're on the NASDAQ now, we're a real company, even though there's a lot of companies on the NASDAQ that probably aren't real companies. So it is considered like a, welcome to the big leagues kind of thing. Doesn't necessarily mean it's a good thing. Like I remember MindMed. This is something that I've been buying in this area. A buddy of mine told me it got listed onto the NASDAQ right here at like $50 and then went down to 6. So again, doesn't necessarily mean it's a good thing. But so what I would just look at it is just purely technically, $4 is the highs back here, and then an area right here. If it holds the highs, great. Above $4, I think you probably want to own it. Below $4, and I'm talking a zone, not an exact price. Below $4, it's probably going to break back into this range. I'm not too interested, but if it can stick the landing above 4, that's interesting, especially because this is going to get wacky, but it'll be fun. Generally speaking, the target on a cup and handle is the low of the cup to the breakout point, then add it to the breakout point again. Not to like hype you up too much, but that's like $300. So I don't know. Not something I would bet on, but that's how they teach in the textbooks for targeting things off of cup and handles. So Godspeed. If you're right and you're buying at 3 and it's going to 300, next time they have a cash tag event, fly out and buy me a beer. TEM is very interesting. This is, for those who don't know, this is like AI and health, and more importantly, this is the other goat other than Warren Buffett, which is Nancy Pelosi, was buying this one as well. Has a lot of resistance up around the $70 area, where every time now 3 times in a row it's gotten to and failed. It's anywhere between like a 70 and 80. So now that it's back above the anchored VWAP from the IPO, this is that purple line. The reason that that's important, and again, you guys got Brian Shannon on. I think he's on Sunday nights. He's the not creator, but he popularized the AVWAP. The idea is this is the average price of everybody trading the stock from the IPO price. So if you're above that, it means the average person in this company is making money, which is a good sentiment indicator. Just everyone's happy because they're making money. And you can see above that, right now, and looks like it might be taking a shot at these 70s. I worry about these highs right here. So when I see those, right, it got right there and then just reverses dramatically, and right there reverses, and like all these reversals are really strong from that point. Just shows me there's probably a lot of sellers up in that zone, or a lot of buyers that are hurt and could turn into sellings when it gets back to it, or sellers when it gets back to it. So I like it. I like the idea of, if we're talking thematic, I think medical side of things is going to be one of the best places for AI in the near future. The uh, dramatic benefits that are going to happen to drug development in AI, I think are bigger than pretty much everything else in the near future. A lot of drugs are going to be discovered using AI, things like that. So I think it's a good play. But if you look at this chart in its totality, it is range bound. So you need some sort of fundamental shift to break us out of that range. So for me, I'm doing nothing here, but I would start to maybe buy a break if it can get back through 70 and just be very, very tight with it. Because what you want to have happen is it to be a momentum play and to get through that 70 and quickly get through highs. Basically showing everyone who's sold in through here and everyone who shorted this area to be wrong and to be hurting pretty quickly. So that's what I'm looking for these plays. And it's done it before, right? This is $30 up to 75. It's done these momentum drives before. So you're looking for one of those to happen. If I'm going to play it, I want to see them happen pretty quickly, pretty quick moves from those. TM. No, we just did that one. Duh. TRWV. Core Weave. This is something that I wish I owned. It was on my list to buy, and there's just too many things to buy. The reason for that is it's perfectly acting like an IPO. There's a lot of studies that have been done on IPOs, and it's 80 to 90% of all IPOs undercut their IPO price. And there's also been systems built to look for that initial undercut of IPOs and then to break back through VWAP. So what we're looking for is, again, a quick undercut of the IPO price. And then as it breaks back through the AVWAP of the IPO price, you can see I'm touching my iPad now because I actually meant to test those systems for myself, because what I do over Stats Edge, again, I trade systems. There's a lot of studies that have that as a trading strategy, and you can see that's exactly what it did, where it undercut the IPO price, and then if you went back through VWAP, the reason that's important is that, sorry, I'm making this note for myself. I'm back through a VWAP because I want to test this for myself, and if it works, it'll be part of my website there. But the idea is that after the IPO, you generally get people who were involved pre-IPO selling. You were an early investor, you were management, you were something. Generally speaking, you have a lockup where for the first little bit, maybe you can't sell. But there's all kind of weird things they'll do where they'll get like another company to short against some shares, and then they net that off. Don't worry, they're selling or they're getting their money when they want to. So that causes the undercut of the IPO price. And then as things go back through that IPO price, sometimes you can get pretty substantial moves higher. I think at Mobileye, I think, is a good example of this. Man, I'm old. Right? Yes, right here. So at IPOs, it quickly undercuts that IPO price. And if you popped a VWAP on right there, as it got back through that IPO price, it had a nice rip and then eventually, right, fade it down with the rest of them. But that's not my concern. I'd be out long before then. CRWV. So this did the perfect thing that I wanted, where it IPO'd and then quickly undercut the IPO price, and now it's bouncing back through. So I like it. I think, if it gets back below the AVWAP from IPO, probably time to go. If not, then I think it's a trade that you could potentially make there. Again, I like it. I think you just need to understand that that might not be enough as an undercut. You may get more of that action under that. And I appreciate you for bringing this up, because I now have, look, this is how systematic traders work. Let me show you a little bit behind the scenes here. So I took a screenshot of that. I've got some notes here, and it's on my iPad. So now that's what I'm going to do this afternoon. I'm going to put that into my systems and run a test, because I know a lot of traders who have systems that do that. So the question is, what you want to see relatively quickly is a breakthrough all-time highs. If you get that push and that breakthrough all-time highs, that just shows that anyone who wanted a deeper pullback, they're paying up. Anyone who shorted this initial move from here, they are underwater and having a bit of a bad time. So, you just gotta know that these things quite often will break under and over this VWAP a few times. I think that TMP or TEM is a perfect example. Right. So this was another one. Here's another, right? IPOs undercuts the IPO price, gets back through the VWAP, the IPO, and then you have a nice little push here that you could play, and then you kind of move on from there. So that's what I'm looking for on something like this. Let's go back here. Is that it very quickly gets through the IPO high, very quickly an extension of that, right? The target for me is kind of, you take whatever that range is and then double it, right? So you take this and then you attach that to your entry price, which is right here, and you can see you got that on Tempus pretty good. So that's the idea. Ethereum, the dog of the crypto space. So I made a whole video about this. Again, stats@trading.com. You can just Google Michael Nauss CMT. I'm everywhere. I do a lot of things. My plan for crypto is very, very simple here. I'm putting these VWAPs on the all-time highs of all of these cryptos. So again, the reason for it is these are, again, not exact lines. They are sentiment indicators, which basically means if you started buying Ethereum at the worst possible time, which isn't, the worst possible time to be buying Ethereum was right there at 47. But if we just take right here, which is the most recent high, you're underwater for all this time, but now you're actually coming in, you're up money a bit. And the idea is that now that you get that kind of sentiment shift, and not everybody hates Ethereum anymore, people start liking Ethereum, then you can start to have a sentiment at your back a little bit and potentially make shots at highs. So I do like this. Some examples of why I'm doing this is if you go back to the last cycle, and you can see, let's do Doge. I think Doge is like the cleanest example here. Yeah. So this is the last cycle on Doge. This was the push up in April of 2024 on Doge, and then it sold off for a long period of time. Well, as you can start to see, it gets back through here on Doge and starts to push back through that price. You get back through. So say you took both. Let's be honest with it. You took this break through the VWAP, and then you failed. You took a little bit of hit off the bat. You go, that sucks. I took a little bit of a tiny hit here. Then it gets back through that price here, and then you have this massive rip. Pepe, I think, did it as well. If we zoom back and we put a VWAP, problem is with these, you need to find like the right exchange that you can do them from. PP. I'm just trying to go off the top of my head which one of these worked. Kraken, generally, you can draw VWAPs on. Yeah, so here's another one with Pepe. Let's say you took a little haircut here, you took a little haircut here, and then you bought it, and then you end up getting this move. So even if you took 2 haircuts on it before, and you end up getting this, I want to just draw a percentage because I'm not even going to look at the dollar amounts. You get 157% gain as well here. So that's kind of my game plan with all of these. It systematizes the entry, and it ranks relative strength and relative weakness. You can see Pepe getting back through here as well. We go to Fartcoin. Fartcoin. And we grab, is this going to be able to do it? You can see the same thing, right? Spends all this time under VWAP. You're not interested, gets back through VWAP. Now, part of the reason that I do this is because I have a system that I use all the time at StatsEdge Pro where we are doing the same thing on stocks. So HIMS was a trade. If you go on my channel, it was a video I made last Monday, and we bought HIMS right here. And the reason we bought it was the same setup. You anchor VWAP from all-time highs, you avoid it as it stays under, as it breaks back through, you buy it. It's not saying that this is like a super amazing way and you'll win all the time, but because the risk is so low, if we get back under VWAP and we hold below it, I'm risking this tiny amount. And then when it hits, if it hits well, you get, right, a big move higher. And I will take that all day long, right? Tiny, tiny hits. And then when you're right, we got 30% in a couple days. So that's how I'm looking at all of these cryptos. So Ethereum is through that AVWAP. Solana is through that AVWAP. You can see I already drew these in. Bitcoin, way through that AVWAP right here. But then you look at something like Doge. Sorry to the Doge people. Right, Doge, not to the AVWAP yet. So it's showing that it's ranking the relative strength and weakness for me. Doge is relatively weak to Pepe and Fart and all of these things. So if they're under that AVWAP from the last cycle high, not necessarily all-time high, but the last cycle high, I'm not interested. If we break through the AVWAP from that last cycle high, those are the ones I want to own. So I have on Kraken fair amount of money, not a huge amount, but all I'm doing is I've got it like separated into 10, and the first 10 that break through, those are the ones that I'm buying, right? So I already have Bitcoin, 1/10 in there. I've got Solana, Ethereum, Pepe, Fart, right? So I'm just going through and I've got all these alerts set. So TradingView yells at me and says, get through there. So that's how I am analyzing crypto, just because there is no other way to do it. It's not like you can look at Dogecoin and say, what is the fundamental process of Dogecoin? Like, it's ridiculous. This whole thing's ridiculous. We live in a simulation, but you got to figure out a way to trade these things, right? So quickly, what is my settings for VWAP? There is no real settings for this. I can just show you, right? I don't do any of the bands. I don't do any of that. I do high, lows, close, open, high-low close divided by 3. You can do high-low open close divided by 4. In theory, it shouldn't matter very much. And I'm just using the drawing tool that's right here. It's the projection, third one down, anchored VWAP. Then you just click on the VWAP, and then you click on the candle you want the VWAP to originate at, and there you go. And again, if you don't know about VWAP, if you're interested about this, again, this isn't me. This is Brian Shannon, who I know is on StockTwits as well. Shout out Brian, buddy of mine. Highly recommend his book. It's Maximum Trading Gains with Anchored VWAP, or something to that respect, something like that. It's a very good tool because a lot of people, it combines a moving average, which a lot of people know, with volume, because a moving average will just, if it's a 10-period moving average, it classifies all 10 candles as of equal importance, even if one of those candles there was a lot of volume and the other candles there weren't. So it does that. And then also it solves the what moving average to pick. Do I pick a 10, a 20, a 50, or whatever? In this place, you're basically just saying, I'm going to anchor from a specific point, and that is the important point. And then everything else doesn't matter. Instead of just picking something that could be seemingly arbitrary, like a 200 or a 50 or a 20 or whatever that is. So, all right, guys, as always, I appreciate you all for coming by. I appreciate you all for asking questions. I've got a whole idea for a system that I want to revisit from one of the questions there. So I love that. That gives me work to do that I can sink my teeth into and maybe build something cool. Again, if you want more content from me, you can just Google Michael Nauss CMT and you'll find me everywhere. And as always, I'll talk to you guys on Friday, and trade safe out there. It's a crazy market.